Hello again, people. Right, I just wanted to put this follow-up video to that pound yen trade that I took earlier, and just to show how these lines are respected. That was a 22 pip trade there. Then, and that was my arbitrary target for that, based on a 15-minute PPZ, price pivot zone. And then, as you can see, you know, we've broken a couple of levels of support here. The green are support and the yellow are resistance. And that one, well, we could start with this one. There was a break between two levels there, and that was a 19 pip move. There's this one here between the green, which is an H4 low. Remember, lows get tested as resistance. See whether the support becomes resistance, old support becomes new resistance. That was a 23 pip move, so knock off a couple of pips for spread, so it's 20, but massive all the same. Then we've got an old monthly resistance, and that was what stopped the price or made it stagger. And then we've got a weekly resistance. So this is why I go back to these. You know, there's nothing else on this chart. There's no curve fitting or anything. It is just draw those lines on and then watch the price do its stuff between the levels. It will make sense, and when you see it do what it's doing here, it gives you even more confidence to consider taking those extra trades. And remember, we're at 19.25 GMT at the moment, and I couldn't resist it. I'd been away chatting to a friend on the phone, came back, could see this was approaching the new, you know, this whole area. I wasn't looking at the charts at this point, otherwise I would quite possibly have gone in. Now notice these areas here that have been virtually totally disrespected, and the reason I'm not worried about them particularly is they are small resistance levels. They haven't even pushed the price below this old low here, so I call those minor resistance because they haven't forced the price below any sort of major support. So in a downtrend, when they've got support below them, they're minor resistance. Over on the left here, way on the left, is where your major resistance has been drawn. Daily high, daily lows, weekly lows, and so on and so forth. This just represents you know, whatever, an hourly high or something like that. But price is pushing through these major old levels of resistance. That's how I see this. The only way you can really come to believe in this stuff, guys, is to actually you know, just draw the lines and watch how price moves between them. And while I've made this video, I want to also say that this still has every chance of reaching these levels here, but not really particularly interested in that. That little move there was 15 pips net of spread. Crazy. 15 pips, 3 times my old targets, as it were, 5 pips. So these moves are massive. They, you know, resistance has been broken and used as support there. See it better on the 1 minute. See what's going on there. It's broken that weekly high, and then boom, 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 boom. This is no coincidence, guys, these levels. So anyway, we've talked about that. Oh, the other thing is as well, look, I haven't moved that descending trend line there. We've got the hourly 8 MA been broken, been used as support. That trend line got broken, and see it on the minute, used as support. What came first, the 8 MA or the descending trend line? These lines have been on the chart for, you know, or been available, as it were. You know, you can draw them once this low is broken by this. That is a valid level of resistance, and because it's made a new low, broken a previous low, you could tighten it up. I wasn't particularly precise about this, and you can look at it on the 1 minute again, and it will look even more interesting. Broken through, hit support, old H4 support drawn hours ago, used it as resistance, pushed it down to there, and then it's burst up again and gone up. This little move here is 10 or 12 pips, and they're clear. You know you've got clear air because you've drawn your lines right from the monthly. So the other thing I wanted to say about this, and I was chatting to a friend who trades stocks, and he's struggling, and I said the best thing you can do is draw that, bring up a compound interest. We've got a video with that on, a couple of videos in way back with the compounding thing. And you know, if you've got £1,000 to trade with, just put £100 in the account, and if you wanted to risk 2% on your £1,000, then that represents 20% on your £100. You're still, you know, because you're using your available credit. Then use that compounding chart I've put in a previous post, fill it in, and then every morning look at that compounding chart and just remind yourself every day that £100 after a month, 20 trading days, 5 trading days a week, after a month, that £100 will probably represent £200 or £300. And you can tweak it, because obviously if you've put 5 or 6 pips as your target pippage, you know you can go for these bigger ones on these more volatile pairs and double the pips, and that will treble or quadruple the account by the end of the month. So your £100 is then worth 400. But don't get bothered about trades you miss or anything. Wait until you've gathered the experience on that, and just build your confidence nice and steadily. And that's how I got better and better at this. I think that compounding sheet is absolutely priceless, because it shows you every day when you think, oh, I'm just making 20 quid today, but then look 10 days time and you'll be making 45 quid, and then look 10 days after that and you'll be making 100 quid per trade. And as I say, you can you can set it for 5 or 6 pips target profit, and you'll see your numbers, and then you'll creep in these longer ones, because you've got these gaps between these things. This gap here was remember, we're out of the busy trading times supposedly. That gap to that resistance, support acting as resistance, was 59 pips. My eyes are failing me this time of night. 59 pips. You know, so instead of just going for your 7 that your spreadsheet, you'll find that after where you should be after 5 days on the spreadsheet, you'll find you're there after 3 days, because you've increased your pip target but you've not increased your trades. So think about that, guys. It really made a difference to me. Trading is all about training your mind, discipline, patience, and it's psychological. It is, in my opinion, 90% psychological, the mind, and 10% skill and strategy. So think about that, and it did make a difference to me, I promise you. It really made a difference to me in the early days. I had that compound sheet given to me by my mentor back in 2007, somewhere around there, and I've still got it now. So hopefully someone like yourselves, fairly new to this, gets this method: trend analysis, support and resistance drawn on the highs and lows of major candles, trading the gaps, using the indicators. He always used indicators as well, descending and ascending trend lines and all that malarkey, and just one trade a day, and then maybe add another trade a day when you've done a month of winning trades on that spreadsheet, and then it just skyrockets your profitability and your confidence as well. Okay, sorry for the long video again. All the best to you, and speak soon.